series where we'll be discussing the comparing of one company with another company. So to do this, what we want to create is what's called a common size financial statement. In this case, we're looking at a common size income statement. So here we're looking at Smart Touch and Learning Tree. Now what you'll notice is these have all been converted into percentages. And what we've discussed in an earlier part to this series is what's called a vertical analysis. And you will notice that we have performed here a vertical analysis for each individual company by taking each category or line item on our income statement and converting it to a percentage of revenues. So as you can see, revenues is 100% of revenues. The reason we do this as opposed to just looking at the dollar amounts is because it's easier to compare apples and apples than it is to compare apples and oranges. These two companies may bring in totally different amounts of revenue, millions and millions of dollars different apart from the two. So it's very difficult to say, well, how well are they performing? Just because one is bringing in millions of dollars more in revenue, it doesn't necessarily mean that the bottom line is much better. So for example, using these percentages, it's much easier to see that. So as we can see, the cost of revenues for Smart Touch is almost 46% of the revenues that they bring in, whereas Learning Tree seems to be better able to control their cost of their revenues, only at 36%. So Learning Tree's 63, almost 64% of Learning Tree's revenues become gross profit, whereas only 54% of Smart Touch revenues become gross profit. And you would look at each individual expense in that same way. So as we can see, net income, Smart Touch, only 12.5% of their revenues become net income, whereas Learning Tree, 23.5% of their revenues that they bring in become net income. So they're better able to control for their costs than Smart Touch. We can also see this in graphical format. And again, this is called benchmarking. So when we compare one company with another, we're benchmarking our company with someone else. So if this is the standard, this is what we should be aiming toward, or the goals that we should meet. So this is a graphical analysis that you can better see. So if you take one item, for example, the cost of revenues. So this is either cost of services or cost of goods sold, depending on what we're selling here. And as you can see, Smart Touch, their cost of creating their revenues is much higher than the cost of creating revenues for Learning Tree. It's very easy to analyze the data with these graphical representations.